Hi, good evening, everyone. This is Lloyd speaking. Sorry, I wasn't really paying much attention. Got caught. All right, so let me share the screens. Yeah. So I don't know how many of you actually knew I do trade stocks. Well, invest. That would be the correct term because those are more for longer term. Yeah. Let me have a look at natural gas. This is becoming quite sad. You see, I'm about done my I'm about to dump my natural gas. So what happens is that if natural gas still drops another round to probably about 2.3, 2.34, then I'll probably dump it already. Yeah. So if this turns out to be a reversal, doesn't look like much at the moment. This is what I'm looking at. Hopefully it will bounce off here. Yeah. So if it doesn't really bounce off here and break upwards and in fact goes all the way down, then I would probably have liquidated my position already. This would be a losing trade of the year. Not that bad, considering that I actually got into STI, which is actually got into STI during the first somewhere here. Yeah. So I actually brought about 2005 at 10th, and I thought, hey, look, this might be a double bottom at 10th. Pretty sure there was a divergence somewhere where I caught it. Yeah. So I actually traded this at 10. So this is what I was seeing. You see the red line. Yeah. So I actually jumped in, and then price a few days later immediately took a set turn. So that kind of disappointed me a bit. But I did hold on to my position. For stocks, I tend to be much more tolerant. So actually, price dip went above, happy, dip again. I was like, oh shit, might have to liquidate my positions. Then lo and behold, price rallied. Yeah. So I think this is for those of you who are actually trading, might considering uh, investing those Swiss time index, that's the STI. Yeah. So that's for your benefits. Yeah. So tomorrow I might actually add on another positions. Yeah, seeing that price actually did a successful bounce of it. 2008. So this is a very, very nice bounce. Yeah, a bit late, but doesn't matter. Yeah, so I do think that price will actually break the 3,000 level, which is a good thing. So if you look at a monthly chart, price actually did go all the way. Highest point was about 3,008. Yeah, so I do want to add on to my position before price hit the psychological level of 3,000. I do hold some significance if you look at it from the monthly and daily chart. Yeah, so I don't want to add in position when price is approaching this level. But I will actually add in position if price does this. Same thing goes up, come down, and it goes up again. That's where I will be adding in position. Very much the same thing that I'll be doing tomorrow, adding position to STI. So this is something that you have to consider. If there's any folks out here who actually, if you're doing dollar cost averaging or if you're doing one lump sum, but that's my outlook for STI. Singapore government all up to now seems to be handling quite well. Yeah, and there are even talks currently undergoing that we will be opening up the causeway in Malaysia, JB. So that will actually prove to be beneficial to the business environment overall, provided there's no outbreak. But let's think of the positive things for now, since it's the festive seasons. Yeah, so look forward to STI. And the S&P is also another piece of good news. Price did a successful bounce off this level, which is really nice. Came to about 3,007, wobble a bit. So I'll be looking for the same play. Price goes up, come back, interact, and that's where I will jump in. Yeah. So overall, the S&P seems to be faring well. Yeah, seems to be holding up. So again, yesterday I did mention that under a Democratic president, usually the S&P 500 does fare pretty well. Yeah, so you can actually look up for some information. It does rally nearly 100% each time a Democratic president takes over. So let's hope that Joe Biden will actually create a good run, so I can actually join the fund. Now, under a bullish run for the S&P, this will be one of the easiest market to trade, in my humble opinion, because most of the time, this for the S&P market is very easy to trade on the uptrend. Yeah, the retracements are weak. That means look for shallow retracements. then just jump in. And then you can actually let your position run and run and run and run. Yeah, so that's how you can be trading it. Again, for this particular way of trading, I mean, it's not a particular method, but just look at from the past. Yeah, you should easily be able to trade this off a EMA, 20 EMA bounce. So now with that, let's look at some of the charts that I'm looking today. There are actually a lot more charts today compared to yesterday. So Aussie yen, this chart gives me quite a bit of headache. I actually had 2 stop losses on this chart already. But as it is, I'm still bearish about it. That says that price, now if you look overall at the structure, price does seem to favor going low. So you can see that price is doing this. So it does seem to be favor going low. But for one reason or another, it has difficulty breaking it. So I have my fair share of hard pains, 2 stop losses just from trading Aussie yen. Not giving up on this yet. My threshold is 3. So instead of that, I'm going to save myself some pain. I'm going over to H4 sides. Yeah, so if by 10 p.m. this gives me a bearish engulfing bar, I will still be jumping in because that will more or less constitute my last chance for trading a particular pair, especially H1. Yeah, once I hit 3 stop losses, I will usually be stopping to trade this. So Aussie Kiwi, this is a pair that I highlighted yesterday. Doesn't seem to be gaining much ground at the moment. Price is again picking up the box a bit, and then it seems to be dropping down. Yeah, so I don't think I'll have any good setups. CAD Swiss, very, very good, nice setup. You can see that price broke, retested, very nice test bar of it, and then it broke downwards. Hopefully, it will just continue dropping downwards. On saying that, the irony for trading a setup is that I have to cast aside my fundamental bias sometimes. Because I do my fundamental bias for oil is to rise, and CAD is actually tying closely to oil. Yeah, so fundamentally, I should be bullish about oil, but since I'm trading a pure setup, then so be it. CAD yen again, very nice bounce. You can see that price broke, retested, and then it just dropped down. So I don't think it will actually drop very far. But then again, like I mentioned, trading a mechanical strategy, I do have to cast aside my fundamental bias. Unlike the usual wave rider strategy, whereby I can actually factor in. Swiss yen doesn't seem to be doing anything much at the moment. Yeah, so I'm not going to talk about it. Euro dollar, I have no idea what causes this rally. This is like a 60 pip rally. Yeah, so what I can only do at this point of time is waiting for price to actually drop further down. So once a retest is done, then that's where I'll be happily jumping in. Let me have a look at the higher time frame, see what's happening. Now the irony of that happening when price drops to this level is that on the daily time frame you'll be seeing a high test bar, and that's where people will actually be kind of a bit freaking out, I would say. Yeah, but nevertheless, I'll still be waiting for a retest at this region. Any of you know what's causing this? Any news? Is it USD side or the Euro side? If Euro side, then I'll be suspecting it's a vaccine. If it's the USD side, then I'll suspect that the President Donald Trump might be doing anything funny again. Anybody here to enlighten me? Yeah, so Euro Aussie in fact didn't do anything much. Yeah, so it's only Euro USD that jumped. So Euro Aussie is quite safely still in the middle of the box, not doing anything. At this stage, you can see that Euro Yen did jump and then plunge. Yeah, so hopefully I'll get a setup for me to go short again. Now the reason why I say again is because I did actually trade this. This was a very nice trade for me. High test bar off the box. Price did plunge. And then this caused me to lose the trade. So I'm hoping for another trade setup for price to go down. Yeah, be it a break setup, which I will take, or a retest setup, I will also take. Yeah, so let's see what happens. Kiwi Swiss. I thought I would have a setup, looking forward to a retest bar. Doesn't seem to be giving me a retest bar. Yeah. So let's see. Let me look at the H4. Yeah, it does kind of look like it wants to go short. So we shall see what happens at then. Now dollar Swiss, looking at this, probably must be the dollar. Yeah. So same thing, I'm just looking for a retest, and then I'll prepare to short it to oblivion. Hopefully that happens. Yeah. So this kind of setup is my happiest kind of setup, whereby when I do my currency index, I'm still bearish about dollar, and then I'm seeing that dollar has a breakdown to the short side. I'll be happily jumping in. All I'm lacking is just a viable setup for me to jump in and have fun. The dollar cap shoot back in. So I think between dollar Swiss and dollar cap, dollar Swiss seems to have a better chances of setting up today. Yeah, dollar cap probably can jump it and might resume tomorrow. See whether it still gives me an insight. Yeah. So there are actually a couple of setups that I'm looking for it to set up, especially the dollar pairs, yeah, and the euro pair. Yeah, so, but those are actually correlated trades. So let's see what happens next. I might just reduce my risk. Yeah. By the way, any of you actually jump into trade Singapore stocks, or just the generally the STI, Straits Time Index? Yeah, Straits Time Index is not hard to trade. It's slow and steady. I mean, it's slow, but it's kind of predictable, especially if you're Singaporean and you know and you read the news. Yeah, you kind of actually can pick up the sentiments at that. It's not hard to trade. Yeah, by the way, Orlando won't be joining us tonight. He seems to be still having difficulty establishing connections. Yeah, natural disaster sucks. Yeah, so I think this, I'm not very sure whether next week we will be having tea and hot sauce. Yeah, because on the 22nd, AEW is actually resting. Yeah, so this might very well be the last show for tea and hot sauce. Hi, SF. Hi, Louis. Louis, it seems like USD is up. Why is my... Nobody trades STI? That's sad. Support Singapore a bit. Jump into STI. Push out the market. Or rather, support me a bit. Push out the market. Just kidding. So it seems like USD is up. Why don't I just have a look at the... What do you call it? Dollar index. There it is. No, dollar index doesn't seem to be up. You see, I hope you understand what's the dollar index. I mean, it's just a basket of currency weighted against the US dollar. Then at 10, you can see that today's bar is actually bearish. So I don't think USD is up. For some pairs, it might be, or it might even be a knee-jerk reaction for that particular time frame, on the lower time frame. Looking at this, I don't think USD is up. It seems to be continuing this merry way to drop all the way to $90. Yeah. Let me have a look at Aussie. Wow. So I did get my way for the Aussie currency index. You see, during Sunday when I did my analysis, I was saying that look, I'm hoping that once Aussie at 10 actually breaks 75 really. Yeah, so I was hoping for a kind of retracement back to 75. It did. Yeah, I mean, there was a slight gap of 30 cents. Yeah, so now Aussie seems to be continuing its merry way upwards. So if I have a look at the weekly chart on Aussie, very nice test bar that has been formed, isn't it? Yeah. So I will still continue my bearishness of Aussie overall, and there's a good chance that Aussie actually will rise all the way to $80. Yeah. So once it breaks the level of 75, the midline for my range, the 70 and 80, I think there's a very good chance that price will actually grow. You can see that actually price did have a good interaction with 75 in the past. Yeah. So to answer your question, DXY dollar, USD overall, I think it will still continue weakened. Aussie overall, I'll still think that it will strengthen. By all means, it doesn't mean that Aussie across the board will strengthen. I think Aussie Kiwi, let me have a look. Yeah, so this is what you're seeing on Aussie Kiwi now on the daily time frame. Yeah. So what it means is that Aussie will strengthen, but against another pair that's Kiwi, Kiwi seems to have more strength. Yeah. So I do remember saying that I'm still bullish about Kiwi. In fact, I'm actually bullish for all the currency except for DXY. Yeah. So let's have a look at Kiwi again. We have a bit of a revision. So this is my, at 70, Kiwi is my horizontal level. So you can see what happened is that Kiwi broke, retested 70, and then it continues on its bullishness. So what it means is that between Kiwi and Aussie, just don't trade that particular currency since you know both is going to be bullish. And it also means that Kiwi is much more bullish compared to Aussie. That's what the information I can give you from the charts. Yeah. I hope that answers some of the questions or queries. SGX too slow. I would agree with you, but again, slow and steady. Yeah. I mean, we are all Singaporeans, so we can have our fingers on the pulse of the market on Singapore quite easily. Yeah. So as long as you know what the government policies are and how the local environment fares, then I mean, slow money is still money to be made. Yeah. The currency market, well, in all honesty, I will still hold my opinion that most of the majors will rise, with the exception of USD. That means you just have to pick your pair to trade. Yeah. That means, if my opinion, I mean, if my analysis is that, I'm talking about myself, if all the currencies, the majors are going to rise, that means they are, in essence, other than USD, all the others, they are really trading the strong against strong, the bullish against the bullish. That makes it hard to trade. So for me personally, I'll just trade the majors. That means Aussie dollar, Kiwi dollar, pound dollar, dollar yen, because USD is the only thing that's weak to me. So obviously I'll trade the strong against the weak. Then the crosses and the minus, I'll just forget about it. Yeah, that's how I will actually approach. That's how I seek my clarity. I thought USD SGD is quite easy to trade. It's just pumping downwards. It's probably just screaming for us to trade it. And to me, this is one of the easiest to trade because in the past, if you look at what Singapore is capable of, we are the richest economy in Asia. So if we are recovering, then it makes sense that our currency will strengthen the most among the other Asian currencies. Just buy Sing dollar and dump USD. That would be the appropriate way to actually approach the markets. All right, so with that, let me look. If you have any more questions, if you have not, then that's the end of my presentation today. Orlando is not joining us, and I have nothing more to present. So let me have a look. All right, seems that's about it. Look, guys, enjoy your festive season, enjoy your Christmas, enjoy your New Year. Yeah, hopefully in the coming 2021, I will be able to conduct some breakout group that I can be able to meet your face to face, and let's have some fun. Till then, take care.